Okay, monsters, I'm back. Let's take a look at ServiceNow, symbol NOW. This is a tech company. ServiceNow is a symbol. It's a cloud company that is on my radar. I want to show you a technical setup, and then we'll dive into something more detailed. So, here is the daily chart, and basically what you will see back in January, just like we saw this in Tableau software, symbol data, we saw in a bunch of other software companies at the time, they basically reported earnings in January and they all crashed. They just crashed big time. Why? Because there were some hints that the growth is slowing, not materially, but slight deceleration in growth rate, as well as we also saw basically just in an environment, it was just a function of an environment where the multiples, valuation multiples were starting to come down. So they crashed big time, they continued to crash, and then they came back. Now here's a technical setup. What I'm looking at over here, this is a daily chart. Here's a power candle that is printing today. There's no news out there, but it's printing a power candle, and you can see that it's trying to break out. It's attacking this level. See the volume over price supports bars and resistance right over here. So it is trying to break out right from this level, right from here, around 64.40. And once it breaks out from here, you can also look at this as a beautiful looking cup and handle formation. If it breaks out over here, there's really there's this big air pocket above that goes all the way up to 69.80. 69.80. So from here, 64 something to 69.80. There's a big area. There's like $6 of upside that potentially it opens up. Now that does not mean it's going to go all the way and fill the gap, earnings gap, which is all the way to 74. This is how most technical traders will make a mistake. I'm only looking at my volume over price bars over here, and I see this thing breaking out and likely heading all the way to 69.80. To show you another way of taking a look at it, let's go here. Okay, so this is through stockcharts.com. Now what I've done over here is I've moved all the moving averages. Usually I will have 8-day, 20-day, 50-day, 100-day, or whatever, 200-day. I removed all the moving averages to just show exactly in raw format what I'm looking at. So here's a chart. It crashed big time. It came back, and now it's trying to break out. Look at the Bollinger Bands. They're extremely tight. I went back and looked at the last 1 year of history. These are one of the tightest Bollinger Bands we have seen. Now remember, anytime when Bollinger Bands are tight like this, that means a volatility squeeze is coming pretty soon, which means either a sharp breakout or breakdown. Now see how tight Bollinger Bands were here back in December? When it broke down in that particular case, it just didn't stop. It just kept going and going and going. This time we have Bollinger Bands, and yes, it is a possibility that we may break down from this again, but not according to what I'm seeing in the option market. But first, on the technical side, you see RSI is breaking out. MACD is not showing much yet, but I think it's, if it's a breakdown happens, you're going to start to see MACD start to break out. And you can see that basically right here is the 64.80, 65 level. Let me just make this chart a little bit bigger on my screen so you can take a look at it. So here you go. So here is 64.80, $65 resistance, big volume over price resistance right here. If it breaks out over here, you have nothing but air pocket all the way up to $70 to $72 level. So that's my target. That's at least 10% to 12% to upside. But what's the news here? How is it gonna get there? Well, let's see. First, actually, let's go to the option market. So with that technical setup, here is what I'm seeing in the option market. If you scroll down to all the way to right here to May, there was an unusual bullish risk reversal that was open today. It's a sort of activity that does not cross a lot of people's radar, but it gets my attention. So what they did was, notice the volume in August. Notice the volume in August, 55 puts. Stock is 63.80. They came out and they sold 400 contracts of August 55 puts. They sold those for $3.30 credit. These are August 55 puts. And then they used the proceed to buy May, earlier month, they bought May 400 contracts of May 65 calls. and they paid $4 near the offer for this. So they sold these August 55 puts on the bid for $3.30 credit, and they bought May 65 calls, 400 contracts, paid $4 near the offer for this. So that's a bullish risk reversal. Separately, if you go to the option market, you'll see right here. Now, I'm not sure, this probably is just too speculative in my opinion, but you know, this is current week, and then you go to April, this is next week's expiration, this is regular monthly expiry, and you'll see 1,000 contracts trading in April, 66 calls. And they've been buying these for 75, actually 73 to 80 cents offer side, with stock at 63.80. I mean, these contracts actually not very expensive, and also they're pretty quick. I mean, the stock is 63.89 now, so it's only like $2 away, but they carry a delta of 0.31. You don't have to worry about the actual slippage in the theta value until next week, so there's about 11 days to perform, and they bought 1,000 of these contracts. So basically they're betting, going back to my chart, that 66 is right here, or going to my Thinkorswim chart, 66 is right here. They're betting that this thing is going to make a gap entry into this large gap basically in the next 10 days. And so they bought about $70,000, about $75,000 worth of these calls in April 66 strike. Now, on the fundamental side, this is what I want to show. The kind of news that probably doesn't make a lot of discussions on networks, but it gets my attention. You guys remember back in old days there was a large lawsuit that was settled between Palo Alto Networks, PANW, as well as Juniper Network. I mean, if you go back, I mean, I'm not going to repeat what happened back then. You probably all know the history, but here's Palo Alto Network chart. Let's go to weekly chart. Way back there, like two and a half years ago, when the stock was trading right here around $48, $50 a level, and it had done nothing for a long time. It was a large litigation that they were fighting with Juniper Network, which was settled, which allowed the stock after a long time to start to break out. And when it did, but basically it happened, not only just the technical breakout, but that lawsuit settlement allowed the company to bring back the customers that were staying on sidelines because they weren't sure whether they wanted to go with Palo Alto Network until the uncertainty was removed. As soon as was removed, the earnings exploded higher and the stock ripped higher, and we continue to see earnings momentum just go on and go on for the next 2 years. And here you have the stock that basically went from $48, $47 a level all the way to $200 in good days before it basically went into a long phase of consolidation. We discussed many times that particular event. Now, here is what's happening in ServiceNow. Here's an article from March 8th. This is from RBC Capital, and this is the same exact case with happening with ServiceNow. On March 8th, according to RBC Capital, BMC Software and ServiceNow appear to have settled their patent dispute. Now, these guys have been fighting a large lawsuit, and the trial was supposed to start at the Eastern District of Texas, and BMC wasn't going to give up. And here, the company decided to settle outside of the court. Actually, they settled the patent disputes on the eve of the trial. The jury selection was to begin today, according to BMC. This was on March 8th, but they decided to just get over with it and basically settled. Now, the penalties for this lawsuit settlement have not been decided yet. We'll find out exactly what they are. And that's key here. March 8th was the settlement date. And according to this note, the deadline for all the court deadlines is going to be 30 days, which means my guess is today is April 4th. In the next couple days, we're going to find out exactly what kind of settlement the ServiceNow have with BMC Software. Now, to be fair, ServiceNow has over $1.2 billion in cash. Palo Alto Network, as an example, I just showed the chart, settled with Juniper Networks for $175 million. So that's a precedent for ServiceNow. If ServiceNow also settles for something similar, 175, or let's just even multiply that by 3 times, so something like $500 billion in cash, regardless, it's a huge hangover lifted from the stock that could allow multiple expansion. And that's key over here. This was settled on March 8th. And guess what happened the next day? This was on March 8th. And here's another note right here. This one was on March 9th. As the day after ServiceNow settled out of court with BMC, ServiceNow settled with another large patent with HPE this time. This is the spin-off of Hewlett-Packard, HPE. I'm sure you guys all know. So this was one day after they settled BMC. They went out with HPE and they basically settled the dispute with them as well. These were two heavy, big hangovers on the stock that were sticking around since 2014. So 2 years this fight has been going on, and now both of those lawsuits have been settled. Now, going back to this note from March 8th, here's the interesting note that from RBC that gets my attention. We believe quarterly linearity is aligned and that ServiceNow may be seeing less sales churn than originally anticipated, which could translate to additional sales capacity. Basically, and here's another way of describing, we believe there could be some pent-up demand from a customer perspective that were waiting on the trial. This is exactly what happened to Palo Alto Network. There were customers that were staying on the sidelines. They didn't want to sign up with Palo Alto Network. As soon as the patent was settled, that's what allowed the stock to rip higher because those customers came back. And so these are your two stories. And we're going to find out in the next couple of days, hopefully, that what that actual damage award is, or that ServiceNow is settling, and as soon as that is out, that thing is over, we're going to see the stock sell basically rip higher. Another thing I want to mention is that there are few software companies that have consistently traded on valuations that are well above small cap peers. Now, ServiceNow at this juncture, right all the way here, when it was trading at $80, $90 a share, it was trading at 11, 12 times forward sales. And the company posted 47% revenue growth last quarter, and the projections are now for $1.6 billion for this year. To put this in perspective, the market cap is essentially down from near $17, $18 billion all the way currently trading at the market cap is about $10 billion with no debt. Meanwhile, the sales are going from $1.1 billion to $1.6 billion. So you have sales going from 1.1 to 1.6 billion, and you have market cap that has come down from 17 billion to 10 billion, which equates to forward enterprise value or enterprise value over sales of 6.5 trailing 6.5 times. To put this in perspective, here's a note from Citigroup. Bank of America. Now, I mentioned this, I actually showed this chart a couple days ago in my chat room. Maybe you guys did not catch on this, but basically what this is showing is how the multiple for software companies has contracted significantly, especially since the start of the year, but it's really been happening for the last year and a half. One of those top plays in this particular software segment is ServiceNow, because it is consistently posting 40 to 50% revenue growth. Actually, revenue growth that the consistency that ServiceNow has shown is even better than Tableau software data, which is a slightly different animal, but I like both of these stocks. So here it goes to show how the multiple has contracted. It has come down from 11 times forward sales, now trading at almost 6.5 times forward sales, and the historic multiple for the software space are 5.5 times sales. So you have basically a case that the valuation for ServiceNow has contracted significantly down to earth at 6.5 times sales, which is near historic multiple. And here, at the same time, you have this hangover being lifted with the settlement taking place, the patent settlement taking place with two companies, BMC and Hewlett-Packard, which could allow the customers that are staying on sidelines to come back to the stock, which could allow the multiple to expand again, along with earnings expansion. So that's the whole fundamental story. You have a catalyst here, which is the settlement. You have earnings possibly expanding from this level as those customers come back. You have a chart that is trying to breaking out into a large gap. Once again, here's my another technical look. If it breaks out here, it's going to go to up to 70 to 72 level. And you have a bullish trade. You have some speculative call buying in April, which is next week at 66 strike calls, which is about $2 out in money. And then you have a bullish risk reversal in which they went out to August 55 puts. They sold these for $330 credit to finance May 65 calls, about 400 of these for $4 debit. So how would I trade this? Very simple. No rocket science over here. I'm going to advise go straight to May and buy May 65 calls for $4. Basically, this will cover earnings cycle. So earnings are right here. This is the April expiration. Earnings are going to be on April 20th, so the week after April expiration. So basically, you want to buy the May, just buy straight May 65 calls, and you're looking for a breakout before earnings or even after earnings. Why? Because of this tight Bollinger Bands. If it breaks out here, you're looking for a move of 10 to 15% on the stock to the upside. That's it.